In today's video, we're going to take a look at the PCM fund, ticker symbol PCM. This is the 17th video that's a part of my portfolio series where I'm doing an in-depth analysis on all 32 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 17th in this series does not mean that this is my 17th favorite stock or my 17th largest holding. Also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on WP Carry, ticker symbol WPC, which is an equity REIT that's a dividend aristocrat currently offering a yield of over 6%. I've also done other videos on other PIMCO funds, including PDI and PTY if you're interested. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 259.846 shares of PIMCO's PCM fund. Their fund pays monthly dividends, with their last being for 8 cents per share. With the number of shares that I own of this fund, I receive roughly $20.78 every month from this fund. The PCM fund is a closed-end fund that's co-managed by PIMCO. The fund's objective is to pursue current income by investing in fixed income markets, followed by making capital gains from the disposition of assets. PCM invests in a wide range of different fixed assets, including mortgage-related securities, high-yield credit bonds, municipals, and short-term duration instruments. Additionally, according to their website, this fund may also invest in credit derivatives, such as credit default swaps and other derivative instruments for gaining synthetic exposures. At times, the fund may invest in securities that are, at the time of purchase, rated below investment grade but judged by PIMCO to be of comparable quality. The PCM fund was launched back in September of 1993, making it the oldest closed-end fund that I own and really one of the oldest closed-end funds that I've come across. Despite being a very old investment, I've noticed that PCM doesn't really get a lot of coverage. I've also noticed that it does have a lower trading volume compared to other PIMCO funds. These two facts are kind of surprising to me because although the assets inside of PCM are riskier than average, the track record of this fund is pretty incredible, which I'll go into. Despite that though, PCM is nowhere near my largest investment because I do consider it to be a riskier holding, and as I'll cover later, it is currently overvalued. It has certain fundamental features that I dislike, but I think PCM is a fund that continues to highlight the expertise of the people over at PIMCO. Right now, this fund currently offers a dividend yield of 10.13%, and it's continued to pay monthly dividends since inception. We'll start by taking a look at the assets inside of this fund. Out of the 21 closed-end funds that PIMCO has, PCM is currently their third smallest fund. As of the making of this video, this fund only has $81 million in total assets. To compare that with some of their other funds, PDO has over $1.4 billion, PTY has $1.5 billion, and PDI has over $4.5 billion in assets under management. According to this fund's description, it says, the fund has the ability to invest in agency-guaranteed mortgage-backed securities and private label, commonly known as non-agency mortgage-backed securities. It also invests in investment-grade corporate debt securities, high-yield corporate debt securities, and commercialized mortgage-backed securities. If you couldn't tell by this fund's description, PCM holds a lot of investments that are riskier than your average ETF or really your average closed-end fund. This is not an investment that I'd recommend for overly risk-averse investors. But as I'll break down later, despite the risky holdings, this fund has a great track record of dependable income. If we take a look at their portfolio breakdown, we can see one category stands out in particular. Over half the holdings inside of PCM are mortgage-related, with 51.9% being non-agency mortgages. Because they make up so much of this fund, I'll give a breakdown as to what the differences are. When it comes to mortgage-backed securities, there's two different types, which are agency MBSs and non-agency MBSs. Agency MBSs are created by one of three agencies, which are Ginnie Mae or the Government National Mortgage Association, Fannie Mae or the Federal National Mortgage Association, and the Federal Home Loan Mortgage Corporation, otherwise known as Freddie Mac. Ginnie Mae mortgages are backed by the full faith of the US government, meaning that they're free from default risk. Fannie Mae and Freddie Mac were both chartered by the US government, but they aren't any longer. Regardless, the default risk from these mortgages are very low. This is different from non-agency MBSs, which are full of mortgages that aren't backed by the US government and have a higher default risk. Before 2008, non-agency MBSs were a lot more popular. It's well known that these types of investments played a role in the financial crisis along with the use of derivatives. So you might be wondering why anyone on earth should consider investing in a fund that holds these types of securities given their track record. What I like to tell people is that although MBS securities are still riskier holdings, the mortgage-backed securities that we see today are nothing like they used to be before 2008. Banks and other financial institutions can no longer just issue mortgages liberally. They're required to do a more in-depth background check on borrowers, which helps increase lending standards. These standards were set to help prevent another financial crisis that happened in 2008. Again, MBS securities are still higher risk than probably a lot of other higher yielding holdings, but they're not reckless like they used to be. 23% of their investments are in high yield bonds, which is something that PTY holds a lot of. As I explained in that video, PIMCO typically invests in bonds that are Baa rated and BBB rated. So this would put their investments right around the medium risk category, just above non-investment grade bonds. PCM also holds 11% commercial MBSs and less than 4% of other investment types. The dividend history of this fund is also pretty impressive. For decades, their distributions have been very consistent, typically hovering around a certain amount. In the early 90s, their dividend was about 9 cents per share before falling in 2007 to 7 cents per share. Since then, they've been able to grow it back up to 8 cents per share. So since their IPO almost 30 years ago, their monthly dividend really hasn't changed much. But also consider the fact that this mortgage-heavy investment made it through the financial crisis without cutting their dividend. It was reduced in early 2007 before the crisis, and the share price suffered for a period, but they made it through the recession without cutting their distribution, which I think is really impressive. In my opinion, it's a good example that shows that the team over at PIMCO is really good at what they do. PIMCO has analysts who hand-select every single investment that goes into all of their funds. They monitor on a daily basis every holding inside of every closed-end fund, and they make adjustments as they see fit. Now, that doesn't mean that all of their investments are great. They do have some other funds that have seen a handful of dividend cuts and lackluster performance. But I think the consistency of PCM as well as PDI and PTY highlights the ability PIMCO has to pick solid investments. Now, there is one big downside that needs to be addressed about PCM, which is that it's currently trading at a massive premium. In fact, it's currently one of the most overvalued closed-end funds out there. It's a common issue for this fund as it's almost always trading for a pretty hefty premium. It's not near its all-time high, but it is somewhat close to it, and it's for this reason that I can understand that some people might want to wait to invest in it until its NAV recovers more. But for a lot of PIMCO and other closed-end funds, the market's just willing to pay a lot more for a fund that's been able to provide very consistent income for decades. As long as PCM continues to perform as it has been, then I really don't expect PCM to ever trade at a sizable discount. Higher quality stocks and funds usually trade at premium prices because people are just willing to pay more for them. So if you're the kind of investor that says, oh, I won't invest in it until it's much cheaper, we don't know how much cheaper it's ever gonna be. Despite trading at a premium for many years, PCM's kept giving investors great returns. Running it through a drip calculator, this fund has provided investors an average annual return of 9.13%. That's despite the share price declines from the financial crisis, COVID, and what's been going on right now since 2022. The drip calculator that I use only goes back to August 1st of 1995, so I wasn't able to see the total return since its IPO, so it might be even better than this. Your original $10,000 investment would now be earning $985.68 every month from this fund. In summary, although PCM is a higher risk holding, its returns and dependable dividends have been really admirable. It can't be guaranteed that they won't experience another dividend cut, obviously, but I'm hoping that PCM has already bottomed out. I also didn't start investing in PCM until it already fell by quite a bit, which definitely helps. But with that being said, that's going to wrap up today's look at PCM. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.